Greetings guys, in this beautiful video we are going to be learning on how to use Fibonacci extension, so you need to know that Fibonacci tools there are a lot of them, but the most common one is Fibonacci retracement, and then it is this Fibonacci extension. This Fibonacci extension, it is used for determining exits or for determining where the market will reverse or retrace. So what you need to know is that it is not there to give you maybe entries, but it is there to help you when you have found those entries. So the most important thing about Fibonacci tools, before we elaborate on this one, the most important thing is that they work mostly in trending markets. They work mostly in trending market, and for them to work clearly, they should be clearly identified lows and highs of the market. So they should be clearly identified lows and high of the market. And even when it comes to waves, your waves should be clearly identified that this is an impulsive wave and this is a corrective wave. So that's why a lot of those guys who are using these tools, they also apply zigzag in their chart so that it can clearly show them the waves, you see. So now let's say you have found your entry. Now we are here to use this tool. Okay, before I go into entries, you need to know that this tool, it has levels. So let me just click its settings. It has level, and it is not all these levels that matters. It has these levels or ratios, so it's not all of them that matters. For an example, in my case, I use 0.61 and 0.5. You see, I use 0.61 and 0.5, and then it's 0 and 1. So those are the only levels that I apply in this tool. Why? Because if I am to apply all these, they are going to give me false signals. So I only apply the significant one. For an example, it's the 1, 0, and 0.61 and 0.5. So those are the ratios that I'm using. So I advise you as well to uncheck all of these and only check these 4 that I've checked here, because those are the only significant levels, guys. The 100%, the 50%, the 61, and then the 0. So those are the significant ones, guys. So okay, let's say now you have identified your entry. Let's say maybe you've entered here. Let's say you drew a downward flag or a corrective pattern here, and let's say you enter your market. Maybe let's say wait, let me just put in this low just for educational purposes. Let's say you enter here in this low here as a buy, né? You enter as a buy, and then the next question is that where is the market going to reverse again, or where is this impulsive going to end? When and where is it going to end? So that's where the Fibonacci comes in. That's where it comes in. So the most important thing that you need to know is that when you put the Fibonacci extension, guys, you place it you place it on your previous low as well as your previous high. And then the last important point, it is your entry, which is the most recent low. So it's 2 lows in an uptrend and then 1 high. So you take it, you place the first point in this low, you move it to the next high, you place it, and then you drag it all the way down to your entry point or the most recent low, and then you extend it horizontally like this. You place it like that. So now you have placed it. Remember the key levels that we chose. It is 0.5 here, it is 0.61 here, and it is the 100 there. You see, so it tells you that it is likely that price is going to reverse here, or price is going to reverse there, or your price is going to reverse up there. So now you have these 3 levels of take profits. It's either you close it on the 50, or let's call it 0.5 as it is written, or 0.6 or 1. So now what you have to do as a trader is that it helps you when you have opened multiple positions. When you have opened multiple positions, for an example, let's say you can open 2 positions. You buy this pair, the Aussie Japanese yen 2 positions. Then it will help you to say, this will be my first target, the 50. It is going to be my first target, and maybe the 100 is going to be my second target. Meaning you are going to benefit from this uptrend until it reaches that 100% level, because you can close your trade on the 50 and all of a sudden you see it going down all the way to 100 or your 1 ratio. So that's where it enters. When you open multiple position, it helps you to have multiple exits as a trader. It helps you to have multiple exits as a trader. So same thing applies when it comes to a downtrend. When it comes to a market that is moving all the way to the downward move, you need to know that you have now to just drag it vice versa. You have to just drag it vice versa. So I don't have a downtrend here. Okay, same thing applies to the downtrend. Let's say you've entered this downtrend here as a sell in this high here. Then what you need now, it is no longer 2 lows, but it is 2 highs and then the 1 previous low. For an example, you press sell here, you are waiting for your exit. You don't know where to close your trade, so you take your Fibonacci extension, you put it to the previous high, you drag it down to the previous low, and you click there, and then you pull it up to the most recent high where you entered, and then you extend it horizontally just like this. So now here it's either you would have closed your trade here, or you'd have closed your trade here, or you would have been waiting for a trade to reach this 100% or 1 ratio level. So that's how you use it, guys. It is there to show you where to exit or where to close your trades. So I hope this was helpful, and if it was so, please like, share and subscribe. Thank you.